Fintech has dramatically reshaped the financial landscape over the past decade, blending technology and finance to create innovative solutions that make money management more accessible and efficient. Digital finance now touches every aspect of our lives, from the way we pay for coffee to how companies secure funding for their next big project. It's fascinating to consider how mobile banking and payment apps have revolutionized daily transactions. Instead of carrying cash or swiping cards, consumers now rely on smartphones to make purchases, transfer funds, and even manage investments on the go. This shift toward mobile finance has made banking more convenient and inclusive, reaching underserved populations and bridging gaps that traditional banks once left open. Digital wallets and contactless payment systems have played a crucial role in this transformation. With just a few taps, users can pay bills, split restaurant tabs, or send money across the globe without ever stepping into a brick-and-mortar branch. These innovations are not only streamlining transactions, but are also fostering a culture of financial empowerment and independence. Beyond mobile payments, blockchain technology stands out as one of the most groundbreaking advancements in digital finance. By creating a decentralized and secure ledger system, blockchain has introduced a new era of transparency and trust in financial transactions. Cryptocurrencies, which are built on blockchain, offer an alternative to traditional fiat currencies. They enable peer-to-peer transactions without the need for intermediaries like banks, reducing fees and speeding up transfer times. The rise of cryptocurrencies has ignited both enthusiasm and skepticism. On one hand, digital currencies such as Bitcoin and Ethereum have demonstrated the potential to revolutionize global finance by democratizing access to capital. On the other hand, concerns about volatility, regulatory uncertainty, and security continue to challenge widespread adoption. Nevertheless, many experts agree that blockchain's underlying technology will continue to influence various sectors, from supply chain management to secure voting systems. Another significant development in the digital finance arena is the emergence of robo-advisors. These automated platforms use algorithms to manage investment portfolios with minimal human intervention. By analyzing vast amounts of data and continuously monitoring market conditions, robo-advisors offer personalized investment advice at a fraction of the cost of traditional financial advisors. This technology has lowered the barriers to entry for many aspiring investors, providing affordable access to sophisticated asset management tools. Robo-advisors not only simplify the investment process, but also enhance transparency and reduce emotional biases that often lead to poor financial decisions. With a data-driven approach, investors can maintain discipline and stay focused on long-term objectives even during periods of market volatility. The result is a more efficient allocation of resources and improved outcomes for a broader range of people. Peer-to-peer lending and crowdfunding platforms have also emerged as vital components of the fintech ecosystem. These platforms connect borrowers directly with lenders or investors, bypassing the traditional banking system. For small businesses and startups, this means easier access to capital without the stringent requirements imposed by banks. Investors, in turn, have the opportunity to earn attractive returns by funding projects that align with their interests and values. Crowdfunding, in particular, has democratized the process of raising capital. Entrepreneurs can now pitch their ideas to a global audience and secure funding through small contributions from many supporters. This model not only validates the market potential of new ventures, but also builds a community of advocates who are invested in the success of the project. The power of collective financing is reshaping industries and giving rise to a new generation of innovative enterprises. Traditional financial institutions have been compelled to adapt in response to the rapid growth of fintech. Banks that once dominated the financial services sector are now embracing digital transformation to stay competitive. Many have invested heavily in technology to upgrade their systems, launch mobile apps, and partner with fintech startups. This convergence of old and new creates a dynamic landscape where collaboration and innovation drive progress. The shift toward digital finance has also spurred the development of regulatory technology, or RegTech, which aims to streamline compliance and reduce the burden of regulatory oversight. In an increasingly complex financial environment, RegTech solutions help institutions monitor transactions, detect fraud, and ensure adherence to evolving regulations. By leveraging advanced analytics and machine learning, these tools make it easier for companies to navigate regulatory challenges while maintaining robust security and transparency. Data security and privacy remain paramount concerns in the digital finance world. As more personal and financial information is stored online, the risk of cyber attacks and data breaches increases. Fintech companies must invest in robust cybersecurity measures to protect user data and maintain trust. Innovations such as biometric authentication, encryption technologies, and multi-factor verification are essential components of a secure digital ecosystem. Balancing convenience with security is an ongoing challenge, but one that the industry continues to address with increasing sophistication. Artificial intelligence and machine learning are further transforming digital finance by enabling smarter decision making and predictive analytics. These technologies can analyze patterns in consumer behavior, forecast market trends, and even detect anomalies that might indicate fraudulent activity. Financial institutions are harnessing AI to personalize services, optimize investment strategies, and improve customer support. As these systems become more advanced, they promise to enhance both the efficiency and accuracy of financial operations. The impact of fintech extends well beyond individual transactions and investments. It's also changing the way entire industries operate. In sectors like real estate, for example, digital platforms now facilitate everything from property searches to mortgage approvals. Investors can quickly assess market data, access virtual tours, and even bid on properties online, all without traditional intermediaries. This integration of technology into real estate finance not only accelerates processes, but also increases transparency and accessibility. Insurance is another industry undergoing a digital revolution. Insurtech startups are reimagining how insurance products are designed, marketed, and delivered. By utilizing big data and advanced analytics, these companies can offer more personalized policies, dynamic pricing models, and streamlined claims processing. The result is a more customer-centric approach that aligns premiums with actual risk profiles, ultimately making insurance more affordable and accessible to a wider audience. Fintech is also playing a vital role in promoting financial inclusion on a global scale. In many emerging markets, traditional banking infrastructure is limited, leaving millions of people without access to essential financial services. Mobile banking and digital payment systems have bridged this gap by providing low-cost, accessible alternatives. By leveraging mobile networks, fintech solutions have enabled individuals in remote areas to open bank accounts, receive remittances, and even apply for microloans. This progress is not only empowering underserved populations, but also stimulating local economies and fostering sustainable development. Digital finance has sparked an entrepreneurial revolution, with new business models emerging at a rapid pace. Fintech startups are constantly pushing the boundaries of what's possible, experimenting with innovative solutions that challenge conventional wisdom. Whether it's developing decentralized finance, DeFi platforms that operate without intermediaries, or creating digital identity solutions to streamline customer verification, these ventures are reshaping the future of finance. The agility and creativity of fintech companies drive competition and force established players to evolve, ultimately benefiting consumers and the broader economy. Of course, the rapid pace of innovation brings its own set of challenges. The regulatory environment for fintech is still evolving, with the governments and regulatory bodies grappling to keep up with the technological advancements. Striking the right balance between fostering innovation and protecting consumers is a delicate task. Overly restrictive regulations could stifle growth, while too lenient an approach might expose the financial system to undue risks. Collaborative efforts between regulators, industry leaders, and innovators are crucial to creating a framework that supports both progress and stability. Another challenge is ensuring interoperability between traditional financial systems and new digital platforms. As fintech continues to expand, the need for standardized protocols and open APIs becomes increasingly important. Interoperability not only facilitates smoother transactions and data sharing, but also enables a more integrated and efficient financial ecosystem. Industry stakeholders are actively working toward common standards and frameworks that will help bridge the gap between legacy systems and modern digital solutions. Looking ahead, the future of fintech and digital finance appears both promising and complex. Emerging technologies such as quantum computing, augmented reality, and even the Internet of Things, IoT, have the potential to further disrupt and enhance the financial sector. Quantum computing, for instance, could revolutionize data processing and risk assessment, enabling unprecedented speed and accuracy in financial modeling. Augmented reality might transform how consumers interact with financial data, offering immersive experiences that make complex information more accessible and engaging. The integration of IoT devices could lead to smarter, more connected financial ecosystems where everyday objects contribute to data collection and analysis. The continued evolution of fintech will likely lead to even more personalized financial experiences. As data becomes increasingly central to digital finance, companies will be able to tailor products and services to the unique needs of individual users. This hyper-personalization could extend to everything from customized investment portfolios and dynamic loan offers to bespoke insurance policies that adjust in real time based on changing circumstances. By leveraging advanced analytics and AI, digital finance providers can anticipate customer needs and deliver solutions that are both efficient and deeply relevant. Collaboration between fintech companies and traditional financial institutions is expected to intensify as both sides recognize the benefits of combining their respective strengths, while fintech startups bring agility, innovation, and a deep understanding of digital trends. Established banks offer stability, regulatory expertise, and extensive customer networks. Together, these entities can create hybrid models that leverage the best of both worlds, fostering a more resilient and adaptive financial system. Such partnerships are likely to drive further innovation while ensuring that the industry remains grounded in sound financial principles. The global nature of digital finance means that cultural and regional differences will continue to influence the direction of fintech innovation. In some regions, mobile banking and digital payments have become the norm out of necessity, while in others, emerging technologies like blockchain and cryptocurrencies are gaining traction as alternatives to traditional systems. This diversity of approaches creates a rich tapestry of innovation where lessons learned in one part of the world can inform developments in another. As fintech continues to evolve, cross-border collaboration and knowledge sharing will be essential in shaping a truly global digital finance ecosystem. Despite the many opportunities, digital finance is not without its risks. Cybersecurity threats remain a constant concern, with hackers and fraudsters continually devising new methods to exploit vulnerabilities. Ensuring robust security measures, continuous monitoring, and rapid response strategies is critical to protecting both institutions and consumers. Moreover, as financial data becomes more valuable, issues of privacy and data ownership will require careful consideration. Balancing innovation with ethical data practices and transparent policies is vital to maintaining public trust in the digital financial system. As digital finance becomes increasingly integral to our daily lives, education and digital literacy will play a key role in its success. Consumers must be equipped with the knowledge and tools to navigate this rapidly evolving landscape safely. Initiatives aimed at improving financial literacy, particularly in emerging markets, can help ensure that the benefits of fintech are widely shared. By fostering a more informed user base, the industry can mitigate risks and empower individuals to make sound financial decisions in an increasingly digital world. Ultimately, the journey of fintech and digital finance is one of continuous transformation. The rapid advancements in technology, coupled with a growing demand for efficiency and accessibility, are driving profound changes across every corner of the financial sector. From mobile banking and blockchain to robo-advisors and peer-to-peer lending, the innovations emerging today are laying the foundation for a future where financial services are more inclusive, secure, and responsive to the needs of every user. As the industry moves forward, the key to success will be adaptability and collaboration. Stakeholders, from innovative startups to established banks, from regulators to consumers, must work together to create a financial ecosystem that is both dynamic and resilient. By embracing the challenges and opportunities presented by digital finance, the industry can build a future where technology and finance converge to deliver unprecedented value and empowerment for all. In this rapidly changing world, digital finance is not merely a trend. It is the future of money. The innovations of today are paving the way for tomorrow, where financial transactions are instantaneous, secure, and tailored to individual needs. Whether it's through enhanced mobile payments, groundbreaking blockchain applications, or the personalized touch of AI-driven advisory services, fintech is transforming how we interact with our money and each other. The evolution of digital finance is a story of progress, resilience, and endless possibility. As new technologies emerge and the boundaries of what's possible continue to expand, the industry stands at the forefront of a financial revolution. This revolution is about more than just technology. It's about reimagining the very foundations of finance to create a system that is fairer, more transparent, and accessible to everyone. By staying informed, embracing innovation, and prioritizing security and inclusivity, the world of digital finance can unlock tremendous potential. The journey may be complex and filled with challenges, but the rewards are equally immense. A financial landscape where convenience, empowerment, and opportunity are available to all. The future of money is digital, and that future is already here, transforming lives and reshaping economies around the globe. Digital finance represents an era in which technology and financial services converge to create innovative systems that redefine money, commerce, and investment. Over the past decade, transformative breakthroughs have replaced age-old methods of banking and asset management with digital ecosystems that empower both individuals and institutions to operate with unprecedented speed, transparency, and inclusivity. This evolution began with a simple goal: to simplify financial transactions and reduce reliance on physical currency. Today, advanced digital infrastructures underpin an extensive network of services, from managing daily expenses and savings accounts to orchestrating complex investment strategies. With the rise of high-speed internet and ubiquitous mobile devices, consumers now enjoy a level of convenience that was once unimaginable. Every tap on a smartphone or click on a computer screen can trigger instantaneous transfers, automated bill payments, and real-time financial insights that keep users continuously connected to their money. At the core of this digital transformation is a shift in how financial records are created and maintained. Distributed ledger technology has emerged as a revolutionary method of recording transactions securely and transparently. Unlike centralized databases that are vulnerable to single points of failure, these decentralized systems distribute data across multiple nodes, ensuring that records are immutable and verifiable without reliance on a central authority. This shift not only enhances security, but also builds trust among users, as every transaction is traceable and tamper-resistant. The application of such technology extends far beyond mere record keeping. It is now being harnessed to improve everything from the contract execution to supply chain integrity. Another significant milestone in the digital finance journey is the development of central bank digital currencies, CBDCs. As national governments and monetary authorities experiment with issuing digital forms of legal tender, the traditional boundaries between physical and digital money blur. CBDCs promise to deliver faster payment systems, lower processing fees, and enhance control over monetary policy, while also fostering financial inclusion in regions where banking services are sparse. This governmental push towards digital currencies opens up new avenues for secure, efficient, and broadly accessible financial services that have the potential to transform domestic and international commerce alike. The digital revolution in finance is also redefining wealth management and investment advisory services. Online platforms now offer tools that allow individuals to construct, monitor, and adjust diversified portfolios using algorithms that process vast amounts of data in real time. These platforms provide personalized advice that considers an individual's risk tolerance, financial goals, and market conditions. Sophisticated analytical tools, once confined to elite financial institutions, are now available to anyone with an internet connection. This democratization of wealth management not only levels the playing field for retail investors, but also encourages more informed and strategic decision-making, resulting in more resilient personal and institutional portfolios. Artificial intelligence, AI, and machine learning have become indispensable in this digital finance ecosystem. These technologies analyze enormous data sets to detect patterns, forecast market trends, and optimize decision-making processes. For example, AI-driven models can identify irregularities in transaction behavior that may indicate fraudulent activity, enabling financial institutions to react swiftly and mitigate risks before they escalate. In addition, machine learning algorithms continually refine their predictions based on new data, resulting in an adaptive system that evolves alongside market dynamics. This constant evolution is driving improvements in everything from customer service and risk management to the development of new financial products that are precisely tailored to consumer needs. In parallel with these technological advancements, innovative models of peer-to-peer finance have emerged. By facilitating direct connections between lenders and borrowers, these models bypass traditional intermediaries, reducing costs and streamlining access to capital. Such platforms allow individuals and small businesses to secure financing on more favorable terms than those offered by conventional banks. This form of financial disintermediation has also fostered global networks where investors from disparate parts of the world can participate in funding ventures and projects that resonate with their values and local needs. As these direct financing models expand, they contribute to a more interconnected and resilient global economy. Regulatory frameworks are evolving in tandem with digital finance innovations, aiming to strike a balance between fostering growth and protecting consumers. Regulatory agencies across various jurisdictions are designing policies that address emerging challenges such as data privacy, cybersecurity, and market volatility, all while promoting an environment where innovation can flourish. Collaboration among regulators, technology experts, and industry leaders is critical for establishing standards that ensure robust oversight without stifling progress. These initiatives are laying the groundwork for a regulatory landscape that can adapt to rapid technological change, ultimately benefiting both market participants and the broader financial system. In many parts of the world, the rapid expansion of digital finance has been a catalyst for broader economic development and financial inclusion. Regions that previously had limited access to traditional banking services are now experiencing a surge in economic activity thanks to mobile banking applications and online payment platforms. These technologies provide essential services such as microloans, digital remittances, and even investment opportunities, directly contributing to the reduction of poverty and the stimulation of local economies. By empowering individuals with the ability to manage and grow their financial resources, digital finance is fostering a new generation of entrepreneurs and small business owners who can participate more fully in the global economy. The impact of digital finance is not confined to consumer banking or small scale transactions. It is reshaping global trade and supply chain management. Cutting edge tools like smart contracts are automating complex agreements, ensuring that contractual obligations are met automatically once predefined conditions are satisfied. This automation reduces administrative overhead, minimizes the risk of human error, and expedites the entire transaction process. As a result, international trade becomes more efficient and less prone to the delays and uncertainties that have long plagued traditional systems. Businesses can now manage inventory, coordinate shipments, and reconcile payments with a level of precision and speed that was once out of reach. Integration with the Internet of Things, IoT, further amplifies the transformative power of digital finance. As everyday devices become interconnected, they generate real-time data that can be harnessed for financial decision-making. Sensors embedded in vehicles, machinery, and consumer products provide insights into asset performance and operational efficiency, facilitating more accurate risk assessments and enabling dynamic pricing models. For instance, insurance companies can use real-time driving data to tailor premiums based on actual driving behavior rather than static demographic factors. This synergy between IoT and digital finance is paving the way for a more responsive and efficient financial ecosystem that can better serve the needs of modern society. Enhanced security measures are also a cornerstone of the evolving digital finance landscape. With an ever-increasing volume of sensitive data being transmitted and stored online, robust cybersecurity protocols have become essential. Cutting-edge encryption techniques, multi-factor authentication systems, and biometric verification methods are continuously being developed to counter emerging threats. The implementation of these advanced security features is critical for safeguarding the integrity of financial transactions and maintaining public confidence in digital platforms. As cyber threats grow more sophisticated, so too must the defenses that protect against them, ensuring that digital finance remains a safe and reliable domain for all users. Digital identity verification has become another vital component of this rapidly advancing ecosystem. Traditional methods of identity confirmation are giving way to solutions that leverage biometric data, cryptographic keys, and blockchain-based credentials. These systems not only enhance security, but also streamline user experiences by reducing the friction associated with multi-step verification processes. In a digital economy where speed and convenience are paramount, robust identity management solutions enable smoother onboarding processes, faster transactions, and a lower likelihood of fraud. The evolution of digital identity is thus intertwined with the broader transformation of financial services, providing a foundation upon which trust and efficiency can be built. Tokenization is revolutionizing asset management by transforming physical and illiquid assets into digital tokens that can be easily traded on secure platforms. This process unlocks liquidity in markets that were previously inaccessible to smaller investors and facilitates fractional ownership of high-value assets. Real estate, fine art, intellectual property, and even commodities are now being converted into digital tokens, enabling a broader range of participants to invest in these markets. Tokenization not only democratizes access to investment opportunities, but also introduces greater transparency into asset valuation and trading processes. As this trend gains momentum, it is expected to lead to more vibrant and dynamic capital markets that are inclusive and efficient. Sustainable finance is emerging as a core element of digital transformation in the financial sector. Modern investors are increasingly demanding that their capital be allocated in ways that not only yield strong returns, but also generate positive environmental and social outcomes. Digital platforms are now integrating sustainability metrics into their analytics, allowing investors to track the environmental impact, social responsibility, and governance practices of companies in real time. This transparency helps investors make more informed decisions and directs capital towards businesses that align with long-term sustainability goals. As green finance and impact investing continue to gain traction, digital finance is playing a pivotal role in channeling resources into initiatives that support a more sustainable and equitable future. Decentralized finance, or DeFi, has introduced a paradigm shift by building financial systems that operate independently of centralized authorities. Leveraging automated protocols and smart contracts, DeFi platforms offer services such as lending, borrowing, and asset exchange without traditional intermediaries. This open, permissionless framework not only reduces costs but also broadens access to financial services, particularly for those who have been excluded by conventional banking systems. By enabling users to transact directly with one another, DeFi creates a more inclusive and efficient marketplace. The transparency inherent in these systems further builds trust, as every transaction is recorded on an immutable ledger accessible to all participants. The confluence of digital finance and emerging immersive technologies such as augmented reality, AR, and virtual reality, VR, is beginning to redefine the user experience. AR and VR applications are being designed to provide interactive financial dashboards, immersive data visualization tools, and even virtual trading floors where users can explore market trends in a three-dimensional space. These innovative interfaces not only make financial data more accessible and engaging, but also facilitate a deeper understanding of complex market dynamics. By transforming how consumers interact with financial information, these technologies promise to revolutionize both educational and transactional aspects of digital finance. Cross-border transactions have also benefited immensely from digital innovations. Traditional remittance methods have long been characterized by high fees and prolonged processing times, but digital finance solutions are rapidly eradicating these inefficiencies. Advanced payment networks now enable near instantaneous international transfers at a fraction of the cost associated with legacy systems. This revolution in cross-border payments is especially transformative for migrant workers and families who depend on remittances for their livelihoods. The ability to send and receive money quickly and securely across continents is fostering greater financial stability and reinforcing the global interconnectedness of economies. Data analytics, fueled by big data and real-time processing, is fundamentally altering how financial decisions are made. The immense volume of transaction data, combined with sophisticated analytics tools, allows financial institutions to extract actionable insights that were previously unattainable. This data-driven approach enables more accurate risk modeling, customer segmentation, and predictive forecasting. As a result, financial institutions can tailor their products and services to meet the evolving needs of their clients more precisely than ever before. The integration of big data analytics into digital finance is not only enhancing operational efficiency, but also spurring innovation across the entire financial value chain. Digital finance is also reshaping the public sector and its interaction with citizens. Governments are increasingly adopting digital payment solutions to enhance the efficiency and transparency of public services. Initiatives such as electronic tax filing, digital social welfare disbursements, and online public procurement are transforming how state resources are managed and distributed. These digital systems reduce bureaucratic delays, minimize opportunities for corruption, and improve the overall responsiveness of public administration. By leveraging digital finance, governments can build stronger, more accountable relationships with their citizens while streamlining the delivery of essential services. Moreover, the rise of digital finance has prompted a fundamental rethinking of traditional business models within the financial industry. Legacy institutions, once reliant on brick-and-mortar operations and conventional service delivery channels, are now embracing digital transformation to stay competitive. Many are partnering with technology startups, investing in research and development, and retooling their operations to better meet the demands of a digitally savvy customer base. This shift not only improves operational efficiency, but also allows these institutions to offer innovative products that cater to the evolving needs of modern consumers.